We're going to be talking about COVID-19 and the CARES Act, and we've got Jim Stelten from Bergen KDV and Pat Hobby from Arcona, myself. And, there's a lot of noise going on out there, and there's a lot of people with a lot of questions to the point where it's crashed websites, and, all the advisors that are out there are trying to figure things out themselves as well. Jim here is, I know that he sat down and started reading the documents inside and out over the last week. So we're going to be having a good overview of what's in the heart of it and some of the actionable things that people can be doing these days. And so, Pat, why don't you kind of give an agenda of what we're going to be covering?
Sure. So we're going to have Jim introduce himself here in a few minutes and tell us a little bit about his experience and what they're doing at Bergen KDV. And then we're going to go through a couple of the more significant programs that were included in the CARES Act, the Paycheck Protection Program, and the Economic Injury Disaster Loan. These are a couple really significant programs that were included in the legislation. A lot of businesses are going to need financial help over the next few months. They need it right now. And they pushed this through, and it got signed, I think, last Friday. So it's really important. While there's still some regulations that need to come out and some guidance that needs to come out, Jim and some of his partners have been up literally through the nights reading this, I think, 800-page bill that was signed, and they've distilled a lot of the information on a couple of the programs that are really important to business owners. And Ryan and I wanted to get with him and be able to share some of this information. It's not going to be every single piece of information that people need, but it's going to, we've been through it, and it's a great overview of what these two programs are. I'm really looking forward to Jim sharing his information on this. So with that, Jim, why don't you introduce yourself, a little bit about your background, a little bit about your firm.
Yeah, thanks guys for letting me spend some time with you this afternoon. It has been a whirlwind of activity here over the last week and a half, and has changed a lot of our worlds in a significant way. So my title is business value creation partner with a firm. It means I get out and I work with our clients and look for ways to impact their business through what we do or through someone like Pat and Ryan. And so it's a fun role. I've been with the firm for 11 years. Prior to that, I was CFO of a couple companies, and I ran a retailer for 5 years. And in my former life, I was a CPA. And our firm is Bergen KDV. Today, we have 9 offices in the Midwest. We serve clients in all 50 states. We have 15,000 clients, and they're all middle market type clients across manufacturing, construction, professional service, nonprofit, construction and real estate, and a couple other industries.
And it's a traditional CPA firm with assurance and tax, but also business advisory and other aspects of that. People outside of maybe the Midwest might not know Bergen KDV.
Yeah, thanks for that, Pat. 11 years ago, 95% of what we did was CPA, and today it's 50% CPA. And over the years, what we've been doing is focusing on ways that we could impact businesses in the finance area, human capital management and HR area, and IT. So there's 26 different things that we do, which would include CPA type services. We also have payroll and human capital management systems that we install for companies from 25 people to 10,000 people. 401k investment advisory management. We have a turnaround business that can help companies that are potentially teetering on or going into bankruptcy as well.
That's great.
I was going to say, so with that kind of exposure with your sheer amount of clients and the different service categories, before we kick into some of the actual meat of what people can get into, what are you seeing out there? What are you hearing? Kind of what's kind of the state as Bergen's been viewing it?
Yeah, last week I facilitated 3 town hall meetings, and I was in another town hall meeting, and then through client contact, including calls over the weekend, got a lot of different things that we've been hearing from clients. Probably the first thing is from just kind of a macro level. What I wanted to first do is just find out the pulse in the business community as to how long do they think that this current economic downturn is going to last. You have people on TV this weekend, we're talking about 20-30% potential unemployment. And from a group of business leaders, granted it was 100 of them last week that I was in touch with, what I had heard was, look, if China went into this in December, and if they're emerging today at 80 to 90% of their previous manufacturing capacity, that's about a 3-month time horizon. Maybe ours is longer, maybe it's less, but that's one of the things that I'm hearing a lot of thought leaders and business leaders say, plan for at least 3 months of disruption.
Yeah.
I've got clients that are 80% off of their revenue. Granted, those are ones that are more tied to hospitality and retail. I've got some that, there's no impact. They have some long-term construction contracts. But generally what I'm hearing is, 25% off this month. They're expecting 50% off next month. What I'm also just feeling is, prior to this happening, nobody has time. And, people were being stretched, let alone the advent of this being piled on top of business leaders and having to figure out how to deploy workers remotely. So people are feeling overwhelmed, and there's a lot of confusion on the CARE Act that the government passed on Friday. One tidbit of good advice that one of my clients had said is, she said, you know what, focus on one thing to do each week, one big thing, and then focus on one big thing to do every day. I thought that was some real good advice, because I mean, if you try to consume all of this at once, it'll overwhelm you. A couple other themes quickly, just cash is king. You know what, it's a new era. We don't know how long this is going to last. Protect your cash and manage that very closely from tomorrow forward. I've got clients that are out there doing 3 different types of analyses in terms of how this might impact their business, and for each of those 3 different assumptions, they're building contingency plans on what it is they're going to do. So yeah, and then I've got some clients that all of this is new. They've been very, very busy on other things, and they're picking up the paper this morning and seeing that there's some stimulus money that's available, and they want to learn more about that.
And Jim, before we get into the details of the CARES Act that we're going to talk about, on the point you were just making, we're giving clients advice. Call your customers. Don't be silent. Don't assume they're going to keep paying the way they are. Don't assume they're not. Reach out. Communicate with them. Ask them, what are their offices still open? Are they still processing invoices? Our advice is don't be silent on these things, to make sure you're communicating. And you can do the same thing with your vendors and your lenders. How's your bank feeling? Are they gonna loosen up maybe some restrictions on your borrowing base where you can keep your line of credit going? I think the worst thing to do is for a business owner to kind of just pull in and not communicate with those people, because if you do that, the surprises typically aren't very good.
Yeah, if I add a couple things to that, Pat. Yes, on the customer side, I mean, you have to, if you're going to forecast what your cash is going to be, you need to know what's going to happen with your customers. And it's also just a wonderful, wonderful time to get in touch with your customers and learn what type of pain they're going through. Maybe there's something that you actually haven't even thought of that you may be able to innovate through those conversations. And then I would agree 100% with what you said on the bank side. In my conversations with bankers over the past week, very consistent message from them all. There is absolutely nothing that you could say that would surprise them. They've heard everything after one day of being in business, after we had the onset of this.
Great. I think that's just important for people to. I think business owners and entrepreneurs and people get scared. They think if I call them and pose the question about payments, they're going to cut me off. That's not the way to approach it. Communicate with them, and like you say, you may even find where you can help them. And most customers want their vendors to succeed and thrive and do well. So open up those lines of communication. It'll be good in the end.
Well, I think as we tee up into like what's going to be actionable for them here is this is not going to be a silver bullet that they can just not do anything and then just get a bunch of free money. There's going to have to be some hard work that everybody's got to do on their own while doing this at the same time. And I think to kind of put a bow on what you guys both just said is having everybody's balance sheets are shrinking, right? So you're going to have these conversations anyways, because you're going to have to lean on, everybody's going to have to lean on each other. So having your own plan in place while looking at the CARES Act and how that can be a help, because the money's not going to get wired in immediately. And I think that's some of the stuff that we're going to cover here.
Yeah. So with that, we're going to show on the screen a document that Jim and the folks at Bergen KDV prepared that's going to show that some of the attributes and the aspects of each of the acts and comparing the Paycheck Protection Program to the Economic Injury Disaster Loan. So with that, Jim, why don't we just start at the top and why don't you just start talking about what you guys have learned by digging through the document and the other work you've done.
Yeah, thanks. So yeah, in total, it's $2 trillion for the CARE Act. And the piece that I'm going to speak to today deals with $377 billion of that $2 trillion. It's under the Keeping American Workers Paid in Employment Act. And one of the items that's in that act that's not on this page, I'm going to say it now so I don't forget to say it, is there was, it's either 10 billion or 17 billion that was also allocated to the SBA for the SBA to make the next 6 months principal and interest payments on existing SBA loans. So if you have an existing SBA loan with outstanding amounts, for sure contact your SBA lender, because our understanding is that your next 6 months will be picked up by the SBA through the monies that were earmarked for that portion of this program.
And that's just not a deferral of those payments. They're going to make those payments for you.
That's a great question, Pat. The finance guy got all over that one. Our firm's understanding is they're going to make the next 6, and it'll be a deferral in some fashion. I don't know how they will mechanically make that happen, but I don't believe that that's a giveaway, like a forgiveness. Thank you, Ryan. Like the PPP program has a forgiveness provision.
Great. So for those who are watching, PPP program is a paycheck protection program. Jim's been living this for the last couple of weeks. So when talking to him, he'll slip into calling it the PPP. So I just want everybody to understand what he's talking about.
Thank you, Pat. All right, so we're gonna compare 2 programs under this, and so it's the Paycheck Protection Program and the Economic Injury Disaster Loan, so PPP and the EDIL. So they're both administered by the SBA, and generally, if you have 500 or fewer employees, you qualify. I did see on the SBA website that they do have some provisions where they've deemed some industries small, where they may have more than 500 employees. So just because you have more than 500, don't rule out that you may not qualify. Go to the SBA website and poke around for your NAICS code. Self-employed individuals are also considered, and certain nonprofits. So under the Paycheck Protection Program, there you will use an authorized SBA 7A lender to help you apply for the loan and ultimately for the debt forgiveness under the loan. That'll be a bank, credit union, and other approved SBA loan processors. And if you have trouble finding them, I'll share these slides with Ryan and Pat. You can also see we wrote down how you could also reach out to agencies that could help you find an SBA lender.
And not all SBA lenders are created equal, right? I mean, some of them are very skilled at doing this, and some of them are probably just, dabble in it. I mean, any words of wisdom on how to vet out one of the lenders?
Yeah, I mean, that's a good point. It's all over the map. We're already seeing, even though the banks don't have the final ruling on how they're going to the SBA is going to ask them to process some of this and the systems they're going to set up. We're hearing different things from different clients that have gone to the banks already. Some of the banks have said, you know what, you have to have, the last 2-3 years of monthly payroll information. Other banks have said, you know what, give us the annual, we'll average it for you. So right there, you already have different interpretations.
Yeah.
And that gets to some of the guidance is yet to come out for regulations for this. And that'll put a finer point on it, but the overall thrust of the plan is what we're going to go over today, the high level aspects of it.
Right. And these bankers are busy. They're, Ryan, you had mentioned at the start of the meeting, and I actually today went on the SBA website just out of curiosity. I wanted to see how many billions of dollars of SBA loans have they done in the past. I found a press release that was dated in 2017. They were proud of the fact that at that point in time, they did 30 billion of loans. And now we're talking about 350 billion with economic crisis, with people working remotely, including bankers. They're likely not as efficient as they once were. So this is going to really be a task at hand for everybody to be able to get this money deployed.
So you'll need some patience going through this process as well.
Yeah, but my advice would be this. One of my first calls that I would be making if I were in your audience is I would talk to my bank. I would make sure that they know I'm alive. They would make sure that they know that, I, myself and my leadership team are addressing this. We don't have it all figured out as to what it is that we're going to do, but we're on it. Also, I would ask them for a date when I could get on their calendar and, we could start the process of getting the information to them so I could get approved for the Paycheck Protection Program. Because I saw another article, it was in an architectural website that I was poking around on, and it said there's 690,000 businesses that are going to get some form of aid. And, $350 billion is a lot, but, if they start consuming them in 1 to 3,000 or 3 million, 1 million to 3 million chunks, it's not going to be there forever. So it's really important for everybody to go up and apply.
So then what kind of loan amounts are we talking about then?
Yeah, so I'm going to get that in just a second, Ryan. So on the Paycheck Protection Program, you have to use an intermediary to help you get to the amount that you qualify for and to process the loan. On the far right of the slide that you have here, the Economic Injury Disaster Loan, the EDIL loan, you do that yourself. Certainly you could have your CFO, your accountant, or hire somebody to do it. No SBA lender is involved. I've got some clients that have gone on and they've, in as little as a day's elapsed time, they've been able to get on and file and get all the paperwork in. I've got others that, if they're not as organized, it can take 3 to 7 elapsed days. The site has been crashing. So a tip for you, I was told by somebody that if you use Microsoft Edge, you'll have a better chance of having it not crash, not Google Chrome or Firefox, which is actually the inverse. But usually they send me to Chrome first. I've got some clients that are setting their alarm late at night so that they can get up and get on and fill out the information. Even if you can't get in to submit it, you can download all the forms and you can work on the forms at your leisure. So that's how to apply. Next item is to Ryan's question of what's the loan amount? So under the PPP program, now that I have you guys have heard me enough, Pat, I'm going to start to use acronyms.
There you go. That's fine. Everybody knows now.
Middle column. So 10 million is the max. And the very rough way to estimate what you might get and recognize you're going to submit your information to the bank to submit it within the SBA system to be able to turn out what the actual amount is that you qualify for. A very broad brush, 2.5 times your average monthly payments for payroll, okay? 2.5 times average payroll will yield how much you qualify for, all right? And that's, I'll explain that why 2.5 in a moment. Plus, and here's something where there's inconsistency in practice. Our firm is of the belief that if you have the economic injury disaster loan, the EDIL loan on the far right, you can you apply for both, and if you're awarded both, you could roll the one into the other, okay? Stay tuned on that. I'm pretty sure we'll get further guidance on it. So that would determine how much you can take out in terms of the loan amount. It doesn't mean you have to take the full amount out. And by the way, there are no prepayment penalties under either of these loans, okay? Now I'm gonna go to the EDIL loan. So in the far right column, for loan amount.
Jim, before you go there, on the PPP, it says payroll. Is there and you've got in your document here on the screen, as defined.
Yeah.
Is that worth mentioning what your interpretation is of that at the current moment?
There's a checklist of the things that go into it, but it's the things you'd expect, you know, salaries and wages of employees, insurance payments, or benefits and the like. The things that are a little bit tricky are
Comp plans.
I just want to clarify that point. It does include benefits.
yeah,
Right. Yeah, that's
Comp
important.
plans and bonuses must be difficult.
401k retirement payments. Yes, Ryan, exactly. What do you do with like bonuses? What do you do with commission salespeople? Okay, how do you what numbers should you be using? So expect that there will be more guidance on that. The other thing that's getting a lot of conversation, and once again, there's people interpreting it this differently. Our interpretation of there's $100,000 limit for an employee as to how much you can include to multiply by the 2.5. So what that means is we're of the belief that every employee counts, and if their compensation is over 100,000, you'll count that employee's compensation in the total at 100,000. Any excess is excluded. There are some, and I've seen some information out there where they're actually excluding that employee entirely, which I'm not sure if that's the substance of what it is that the government was looking to do.
Why 2.5 times?
2.5 times. Great question. So what that'll help us as we get to the use of the loan proceeds. So the government wanted to do is make sure you had enough money so that you didn't have to lay off people, and they're giving 8 weeks worth of credit. We'll go over that in a moment, but 2.5 times here would cover your payroll. Plus, if you look, there's 4 other items that you can use the loan proceeds for. One is the benefits, including leaves, interest payments on mortgage obligations, rent and lease payments, and utility payments. So those are the items that you could use the PPP, 3 Ps. The PPP. By the time I'm done with this, Pat, I'm going to call it 3P to make it even simpler for me.
P cubed.
P cubed, there you go.
Yeah. And then for the EDIL loan program, same in terms of maintaining payroll. But here's where there's some differences, okay? Over here, you can also use it to cover the costs of disruptions in your supply chain, where you got increased material costs. Rent and mortgage payments. And number 4 is a real gray area. It'll drive a lot of accountants or people that are really
Oh my gosh, is that a
being
catch-all?
exact. Yeah, this is repaying obligations that cannot be met due to revenue loss. So good luck finding an exact number on that one.
And also, I think we may have got you out of order here. For the loan amount for the EDIL, it's $2 million is capped, right?
Yeah, sorry about that.
No,
it's capped at 2, and they're there needs to be more guidance as to how they're going to come up with the exact amount. Because when you look at even the last item there, Pat, it says loan amount will be based on actual economic injury and company financial needs. Once again, how do you determine that amount?
And that's a distinction from the PPP, where it's more of just a mathematical calculation. You don't have to prove some injury or damage.
Right.
I was just gonna say, like, I mean, and I don't know if we covered this at the very beginning, but like, you know, the reason that there's two and because you can submit for both, right? Because they're solving different problems. Maybe I don't know if I just, was too thick-headed and missed that, or
You can apply for both. However, there is, later on, you'll see in the document that you have up, you will make a representation of the government that you're only using one of their programs for your aid, and you're not
Okay.
double dipping.
got it. And that's why you said you could roll that one into the other one.
That's our belief, and
Yep, got it.
certainly I'm sure there definitely will be more guidance on that.
Okay.
So anything else there, Jim, on the use of the loan proceeds? Or I think you covered those, but wanted to make sure. Okay, this is the biggie coming up here.
Yeah, this is, so what I had made mention of earlier is there's forgiveness with the PPP program. And so the amount of forgiveness is generally going to be the 8 weeks of payroll plus interest payments that you're making on mortgages, your rent payments, and utility payments for any of those that were in existence on February 15th of 2020. Again, excluding, in our belief, any payments on an annualized basis for an individual that's earning more than 100,000, you'd back it down to the 100,000 level. And so here's why.
That's forgiveness. That's not deferral of the amount, or
no. That's yep.
If you keep those employees,
yeah, there's
that obligation will go away.
Yeah. So the reason why we believe the SBA has an intermediary on this is because then the bank, you're going to come back at some point in time after you've incurred these expenses and go to your bank to substantiate how much you've spent, so then they can forgive that amount and reset your loan document. Okay, you should know that the forgiveness of that debt is non-taxable. Okay. Yeah.
That's
huge.
Huge benefit.
Well, then, and now you might be covering this later too, Jim, but the speed to what people get this, because I mean, we're obviously already 6 weeks into this. If they're looking at February 15th as the cutoff, the speed to get the payments, and then also validating that this is a forgiveness. I mean, there's a lot of ambiguity in how that all shakes out too. I mean, that's why tracking all this stuff in your data is going to be huge, because otherwise, I mean, you could be stuck in the crosshairs of this stuff.
Yeah, I was just on a call with a group of business leaders across the U.S., and there was a CFO on there that said, I think I'm going to set up a separate bank account to pay all this stuff out of, so I keep it straight.
Not a bad idea.
And I see there for the economic injury disaster loan program, there is no forgiveness. That's not a provision that's applicable to that program.
There's not. So then let's take you down as to, once you apply and you've got both of these you're looking at, I mean, there is a decision that you need to make. The interest rate in the term is different. The interest rate's pretty close. They're 4% for the PPP and 3.75 for the EDIL. But under PPP, and they've chosen these words, so it says up to, or it won't exceed 10 years. So I'm assuming, well, I shouldn't assume, it's up to 10 years. And on the EDIL program, though, that's up to 30 years. Okay. So let me just go back on the PPP program. So let's say you took out the max that they would allow, 2.5 times your payroll. and you didn't extinguish that at the end of that 8-week period, okay, which starts with your loan origination date, you'd be left with a balance that's left, okay, that you could repay without prepayment penalty, or you could roll that remaining net balance in at 4% over a note term of up to 10 years. There's also some emergency assistance that's available under the EDIL program. And I had to read this a couple times to make sure that I got it right, and I validated it with a few of the others that were with me this weekend doing some heavy reading. Under the EDIL program, you can qualify generally for up to $10,000 to be received within 3 days of your application. And it says this in the CARE Act: the recipient is not required to repay any of that grant money, whether you're approved or you're not approved.
Interesting. So let me ask a general question, and tell me if I've captured this. I'm kind of going back to the rate and the term. If I'm a business owner and I think in 8 weeks I'm going to get through this and I'm going to be able to retain my employees, and that's what I'm going to spend my money on, I might want to pick the PPP because I'm going to get that loan forgiven and there's no tax. But if by chance I can't, and I can't spend that money and I have a loan balance, I'm trading a shorter term that I have to pay it back up to 10 years, where if I went with the EDIL program, I would have 30 years to pay that back. Is that kind of the trade-off that we're looking at between these programs?
Yeah, with one thing that we need to get guidance from the SBA on, which is if in fact, when I started the conversation, if we're right, if you can roll EDIL into this, then you can have your cake and eat it too. But it is, Pat, to your point, it would be at a 10-year term versus if you left it in EDIL, it'd be a 30-year term.
Right. If I ended up with a loan balance in the end of $400,000, I'm making up a number. And with PPP, I'd have to pay it back over 10 years with interest, and under EDIL, I could have stretched that out for 30. So that's.
But you remember, you've got debt forgiveness too, that you'd have to consider that into your.
Right, I was saying after the debt forgiveness, after if I wasn't able to use it all, after at the end of the day, if I had a balance under PPP, I would have to pay it off over 10 years.
Yeah.
Okay.
Some other things, the government is one. The government's guaranteeing this debt at 100%, so no risk to the banks. The government is paying the banks loan processing fees. I think it's, I might be off, but I think it's 5% to 500,000, then it goes to 3 to 2 million, and then 1% above 2 million. So there's incentive for the bank. They want to make sure that the banks
want to do this.
Yeah, they want this money deployed and working and in business owners' hands, and keep people from not being laid off. And so it doesn't bring our economy down worse. The other thing that I want to make mention of here is also the repayment period on these loans can start for sure 6 months out, and it also says possibly up to 12 months. No personal guarantee on the PPP program. On the EDIL program, the personal guarantee on loans for the first 200,000 are waived. Above that, there still would be personal guarantees. I talked to you about the certification that would need to be made. So when you're done under the PPP program, you'd have to certify that, you know what, you're using this, you're going to use this money for the intended use, and that you're not double dipping and you've got money over on the EDIL program that's essentially giving you the same benefit of what it is that you're getting loaned on the PPP program. Then I also identified for you some of the information that the banks are going to want under the PPP program. There's 8 different items and 3 items over on the EDIL program. That's not to say that there's not more than that. These are the main things that you need to be prepared to get together and provide.
You want to just kind of, for the people that are listening, just kind of give an overview of the 8 that are on the PPP and the 3 that are on the EDIL?
Oh yeah, I'm sorry.
No, it's all good.
Yeah, I forgot we're going to do a podcast too. So 1, personal financial statements. 2, business financial statements. 3, your ownership information, how the business is owned. 4, licenses. 5, loans. 6, personal and business tax returns. 7, personal resume or your background. And then 8, history of the business. And then over on the EDIL side, 3 items over there, personal financial statements, business financial statements, and personal and business tax returns.
Some stuff to get together. I mean, it's going to be some work for some people that have never put together a resume. And I mean, there's some heavy lifting that needs to be done, but this is stuff that, I suggest people get people on their team to put this stuff together, because it's worth it. Start now. So yeah, start now. And by the way, this might seem a little ridiculous to even say this, but LinkedIn, if there's people listening in, LinkedIn has the ability to print to a PDF your resume. And I don't know if the banks will accept that. So if you kind of even have if you're paralyzed, you haven't ever had one, there's an easy way to do that.
So Jim, these are significant programs designed, at least in the PPP, to get you through 8 weeks, almost 2 months, of being able to keep your people on the payroll, so that you don't, and we're not going to talk about it now, but there are enhanced unemployment benefits for people, so people could go on unemployment and get, in many cases, substantially their total pay. But then you've lost your employees when the medical virus issue gets resolved and we get back to business. The worst of all worlds is you don't have your employees, and now you're starting over, you're training, you're doing all those things. So that's kind of the motivation of this PPP, is to try and keep the employees connected to the employer.
Yeah, it's I mean, there's the amount of money here. There's never been a time that the government has done any sort of such bailout, including after war periods. And there never will be an easier time for people to get access to monies. I mean, certainly everybody needs it, but biggest message I think would be, if you haven't started on this, it should be number 1 priority over the next week, and just get it to the point where you're ready to apply, or you've applied, and then wait and see how long it's going to take for the government to process some of these.
So I'll leave both of you guys with a question. If I'm an entrepreneur listening, and I've got cash flow issues, but I also want money, right? So I'm juggling my time at the same time. So like, what is the timing of this kind of stuff to getting the funds wired to the account, versus the hurdle of trying to accomplish this? How do you juggle the time and the cash and the cash flow?
Yeah. So what I heard from a couple bankers today was, it's probably going to take 3 weeks. Maybe it's sooner, maybe it's going to take longer. And so a message to all is, cash is king. Preserve every dollar, as if it's your last dollar. And you got to weather the storm until you know how much you're going to get. And that'll also give you an idea as to how to keep planning for this downturn. I don't know. I've asked a couple bankers to pose this question. Basically, if you could look at a company's payroll and you can multiply by 2.5, and you have a pretty good idea as to how much they're going to get. For someone who's really, really in trouble right now, and they're either considering shutting down because they don't have the cash to actually make the next payroll, couldn't you float them with the right to the 2.5 times their payroll when it comes through? And both of them said it's something that they're going to have conversations about.
And if you are communicating with your lender and talking to them about what, if and hopefully, or if they understand your business great, or explain to them your business, why you think you're going to come out of this on the other side, as long as you can hold on, to get to the other side, then it's a good loan on their part.
Yeah. I mean, another thing to, this is my opinion. I'm not sure if they're like the banks, as they get requests in from clients to do the PPP program, if they're taking them on like a FIFO basis, first in, first out. But they're human beings. If they've got a client that is in really serious trouble, I would think they would prioritize them. So make it be known that you really need this, so they can at least get you processed and get you into the queue to get your PPP monies quicker.
Yeah, I'm gonna, Jim talks about cash is king. If you're in business still, you've got to keep the cash flow cycle going. You're trying to get money from your customers. You're having to pay your vendors to keep getting new raw material or whatever it is you might need. So, understanding how your cash is flowing is critical, and doing a cash projection is critical. I'm going to give Bergen KDV a plug, and us at Arcona. We have resources to help you do that. If you need some help doing it, reach out and we can do that, because getting a clear view of what you think your cash flow is going to look like over the next quarter is probably one of the more essential elements that you need to have in place as you go forward.
And I'll just leave it too with, as the entrepreneurs that are listening, you should be the one having the conversations with the lenders, with the customers, with the suppliers and everything like that. Get the other people to have these or to get the data and to be filing this stuff for you, right? You can't do it all. So making sure that you're the face, and I mean, it works. I've been through it. Your word is what got you to where you are. So making sure that you're filling the right roles and you're hiring the other people to do the other spots. Jim, if we were to kind of leave people with, how to make this actionable, what would you leave everybody with?
Yeah. First thing is apply for these. Go do research on it. I can send to you, Ryan and Pat, a link to some of the various resources that I use just to keep everything organized for myself. So familiarize yourself with that. Set a goal as to when you want to have your applications in. Also, find community. So find community with Pat and Ryan. Find community with other business owners. One thing that I've learned over the last week is everybody's in the same boat. This has had the effect of just leveling everything. It's a new day for all of us, but there's a lot of people out there that are in the same boat. We live in the Minnesota area. For those of you that are in Minnesota, this is just a wonderful state to be in from a business standpoint. So many people want to help other people. And so even if your community is somebody that's already been through it and they've already applied, they want to give back. They want to help other people. And the one thing that I hope that just remains after all of this is done is this whole spirit of just, going above and beyond to help one another these days, and, letting differences sit by the side, and just being good human beings. So that's my final hope.
When you've done your duty by sifting through an 800-page document to boil it down to 2 pages. So for the people listening in, you can do the extra mile to get everything submitted. So I appreciate all the hard work you and your firm have been doing, Jim. Appreciate it a lot.
Yeah, thank you for that. We got a lot of great people over at the firm that helped. To your point, it wasn't me doing all this. I did a little bit, but yeah, we got a lot of good people over there that helped.
And these programs, the guidance and the requirements and regulations are going to keep rolling out. So you got to get started and make the applications, and whoever you're dealing with, the SBA or the bankers, they'll just keep, if something changes, they'll let you know, and you just got to adapt and keep moving. Yeah, Jim, we can't thank you enough for your time today and your